Did you know if you're a U.S. taxpayer living abroad and have not filed your U.S. taxes willfully, you may not be compliant with your U.S. tax obligations and you may be putting yourself at substantial risk. Hi, I'm Patrick Evans, founder of U.S. Tax Practice. I'm a U.S. certified public accountant based in Switzerland, servicing clients here and in the rest of Europe. I'm in the business of helping fellow U.S. taxpayers with their tax compliance and tax planning. Did you know that U.S. citizens and green card holders who are not compliant with our U.S. individual income taxes can now take advantage of two favorable programs through the IRS? In my first video, I took you through the Streamlined Compliance Procedure Program, which is intended for individuals who non-willfully were not compliant with their income tax filings. In my current video, we're going to walk you through the Offshore Voluntary Disclosure Program, which is for people who willfully evaded taxes. This program is intended for U.S. citizens and green card holders who neglected to file their tax returns, report all income, pay their taxes, and file informational returns such as FBARs and FATCA due to willful conduct. This puts them at a substantial risk for a criminal liability and substantial civil penalties. But the good news is, the Offshore Voluntary Disclosure Program, also known as OVDP, provides protection from criminal liability and fixed terms for civil tax obligations and penalties. But in order to get that protection, there are some key requirements. The first thing is cooperate in the voluntary disclosure process. And secondly, you need to pay a 20% penalty related to offshore income, which was not reported previously. This includes interest, capital gains, dividends, and earned income from foreign sources. And thirdly, you need to pay the normal IRS penalties, which are for failing to file your tax return and failing to pay any taxes owed. Next, you need to pay a penalty of 27.5% or 50% in some cases of the combined balance of any offshore accounts, such as bank accounts, brokerage accounts, foreign mutual funds, or any account which is deemed to be a foreign financial account. And 5, you need to pay all your penalties or enter a payment arrangement with the IRS. And finally, you need to make an agreement with the IRS and agree to cooperate with the Department of Justice related to any offshore enforcement efforts. And once you've sorted out the key requirements, you also need to provide the following documents. Firstly, payment of all tax, interest, and all penalties. If you aren't able to make the payment in full, you need to submit your payment arrangement documentation. 2, you need to submit all original and amended individual income tax returns. These include all 1040s and 1040Xs for the relevant years in the offshore disclosure period. 3, you need to submit and complete a signed offshore voluntary disclosure letter. And 4, provide all statements related to the foreign financial account. This includes bank statements, brokerage statements, any statement related to the account. And 5, the taxpayer account summary with the penalty calculation attached. And 6, you need to provide a signed agreement which extends the time to assess tax and penalties. And next, submit all foreign bank account reports, also known as FBARs, and copies of all statements related to all financial accounts for the years pertaining to the offshore period. And finally, you need to submit a statement which lists all your foreign financial assets, whether held directly or indirectly. Directly held assets would be bank accounts, investments in stocks, etc. Indirect assets would be mutual funds, pension funds, etc. And remember, OVDP is intended for individuals and their own tax liability. It is not for people who helped other people evade their taxes. If you have a specific question, feel free to give us a call at country code 4152-533-4581. I'm Patrick Evans with U.S. Tax Practice. Thanks for watching and see you in my next video.